So in February, we had 95 homes sell, and that is a 27% increase, which sounds like a big number, but it's typical for demand to go up significantly from January to February. So it was what we expected. And it's down just slightly from where it was at this time last year. Now, if we look at the chart, we can see that March to June tends to be the busiest months seasonally here in the Brantford real estate market. So really watching what happens over the next 60 to 120 days in terms of the overall demand will give us our big indication of how the rest of the year is going to play out. Now, the interesting thing is that we typically see the spring peak and then demand fall throughout the remainder of the year. And that was even more dramatic last year because we did have a couple summer interest rate hikes. Now, this year we expect, as we just saw in those previous charts, the opposite to be true. So I'm predicting that we're going to have a typical spring, but then with interest rates coming down, that may create the demand to stay sustained throughout the second half of the year. On the supply side of things, there were 187 homes come onto the market in February, and that was up just 11%. Remember, demand was up 27%, but supply only up 11% in February. And it was up slightly from where it was last year. So a few more homes coming on the market this February than last February. Now, just like the demand chart, the supply tends to be busiest in spring also, with March to June being the busiest time of year for people putting their homes up on the market. So we're going to keep an eye on these two numbers really closely over the next couple months. And as they play out, it's going to give us a really good indication of what we can expect the second half of the year to be. Because if we have higher demand numbers than expected, the supply is really not going to be able to keep up. And we could find ourselves in a much hotter real estate market than we've seen for the last 2 years. Now, one thing I need to keep pointing out on these videos is there's a little bit of a gamification of the real estate market stats that goes on out there. And a lot of the new listings every month, they're actually not new at all. And you've probably noticed this if you are in the market looking at those refreshed listings. You'll think, hey, haven't I seen that house on the market before? Well, there's a common practice between real estate agents and home sellers to actually pull a house off the market and then relist it. And on the system, it counts this as a new listing again, even though it's not really a new listing. And this has been happening for the last couple of years during the hot market. The reason is quite simply is on public websites like Realtor.ca, it's going to reset the days on market to 0. It's going to ping people it again as a new listing. So it does create a little bit of extra marketing energy for the property versus just simply, changing the price. But it does skew our statistics because, as you can see in February, with it being 40%, that's not a small number. It means that, instead of 187 new listings, there was actually only 112 actual new listings. And when we compare 112 new listings to 95 sales, we can see that those numbers are pretty close together. They're only separated by like 17, extra new listings versus the sales. So that's a much tighter market than if we're thinking 187 versus 95. And so this is a number I actually have to go in and manually calculate. You have to look at every single listing and see whether it was new or it was actually has a history of being listed before. And so this story is one you're not going to see in the headlines, but it's one that I track very closely because it is important to understand what are the real new listings and how is that affecting our inventory.